So when people are sitting there saying, oh, well, after elections, the rates are going to drop, pardon my French, but how the fuck do you know that? Like, be honest, right? You know what I mean? Like, how do you know that? Because it has more to do with consumption patterns. It has to do with unemployment rates. It has to do with our exchange rate with other countries and their currency. Yeah, all these things influence the economic monetary policy what the Federal Reserve actually dictates. So when people are like, oh, rates are going to drop, what is the event? What is the global event that's causing the rates to drop?
Have you ever had a client ask what you think interest rates are going to do in the future and had no idea what to tell them? Or have you ever felt dumb and underprepared when the topic of interest rates comes up in general? Well, if yes, you are in luck because Michael Glaspie is in the house with us today and he's here to make interest rates fun and easy for us, guys. So, Mike is an Army Green Beret turned real estate entrepreneur, and he and I have known each other since we were both babies in the space years and years ago. And we've done so much together between building Five Pillars team, that OG traditional team. We have invested in so much real estate together. We've gone to conferences, the whole shebang. Mike is one of my best friends and he's a total G. So, guys, in today's show, here's what you can expect to learn. We're going to start off with the big picture history of how today's lending system came to be, what actually dictates interest rates, how to best predict them, and how to handle common questions from clients about interest rates. You are listening to the Agent Goldmine podcast. This is the show for agents who've been around the block and are finally ready to build sustainable, scalable businesses. Learn the exact steps to build a business that runs like a machine when you don't secretly hate or want to escape from. My name is Shelby Johnson, and I'm here with my partner in crime, Ali Garced. We are both veterans turned real estate fucking crazy people. We've closed hundreds of transactions between the two of us, and we're here to share everything that we have learned and are currently doing in our businesses. But for today, guys, welcome Michael Glaspie.
Welcome to the Agent Goldmine, the only podcast in the world specifically for real estate agents who are stuck at 5 transactions a year to help them get to 20 plus. Your hosts, Ali Garced and Shelby Johnson, 2 EXP icon agents, each do over 40 transactions a year and interview others who are crushing it. In this podcast, you'll receive the knowledge to help you scale your business using systems and processes with our interviews and monologues twice a week. If you want to be a part of our community, reach out. Welcome to the show.
Today's show is special requested by this girl in Pensacola named Pretty Tori. And Pretty Tori has asked us, some things in the past, and she's just an idea machine. And so this one, she was like, hey, I think you guys should have someone smart come on and talk about interest rates in general. Like, I feel like that's a common thing in our industry where, clients, potential buyers, sellers are always curious. And a lot of times when questions hit us, there's this like deer in the headlight look of like terror and I don't fucking know what to say. And so that is what we're here to talk about today. We are here with Michael Glaspie, who is fucking OG of Five Pillars Nation. And of course, we have Ali here today. And yeah, okay, so just to set the baseline, the intent is just to learn how to navigate the questions, from clients with interest rates, understand what they're talking about, have an intelligent conversation with them, some sources, additional information for directing clients, and whatever the fuck comes out of Michael's mouth, because he's very smart and we're going to get, shot up with some fucking stuff today. Anyway, Michael, welcome.
What's up? Good to see you both again.
Nice seeing you too. We love you.
You are so special. You're so special. And so I think to start out, what can you tell us like a little bit of like history, whatever, some background information. So when people ask us about interest rates today, we like have a bigger picture understanding of what the fuck is going on.
That is a great place to start. So a lot of people look at the interest rates and they're like, oh, you know what? I think it's going to drop in a couple months. Oh, I think it's going to go up. And they really have no idea what's influencing that actual interest rate. So rewind the hands of times, and there's actually something called the Federal Reserve. All right, that's our nation's central bank. This was created all the way back in 1910. So it's not that old, but it was created in 1910 purposely to control the relationships between commercial banks. That's what it was created for. And as time goes on, the relationship is developed, and we can go into all of that if you want. But now what they do is they say, hey, look, we're going to set the federal funds rate at a certain percentage. And that is what the banks dictate their interest rate off of. All right. And so when we understanding that whole process, now we can know that interest rates is not just a quick decision that's being made. It is a large economical decision that the Federal Reserve has a lot to do with. So it's not just, oh, elections are coming. No, it has a lot to do with many different things. And when we saw those really low rates around COVID or even around 2008 when they dropped, it's like, yeah, because a big event happened. This isn't something that's just going to change overnight.
I have a question. Okay, so the Federal Reserve was originally created back in 1910 to control relationships between commercial banks. I feel like I don't fully understand what that means. Can you elaborate a little bit on like that chunk?
Yeah, perfect. So the original or the official date of launch was like 1913. And I guess we got any weird fact checkers out there, so whatever. But so this is what was happening. Prior to that, banks were basically doing loans at whatever rate that they wanted to do. They would say, hey, lender over or bank over here, I'll give you some money, but I'm going to charge you 10%, 8%, or whatever the case is. And so at a certain point, they realized that many things were happening in the market, in the world, in the economy. So the Federal Reserve came together and said, you know what, if we can regulate how much each bank can charge each bank, then we can keep money pumping through the economy. So they came together and they said, you know what, we're going to set the federal fund rate, which is literally Bank of America. If you were to lend money to Wells Fargo, you can only do it at this rate. Let's just call it 4%. Okay. For all of those who are listening, we understand that banks make money because they borrow money, whether they borrow it from our deposits or from somewhere else, and then they lend it at a higher rate, right? So the federal rate says Bank of America, you can only charge regional bank or Wells Fargo 4%. All right. This way it controls the idea of these large banks coming to these regional banks or small banks and saying, hey, we're going to charge you 12% for the funds, and just basically eating up all of the smaller banks and eating up the competition.
I have another question because
Send
I
it.
think that makes sense. And Allie, oh my God, you can cut me off at any point. But so this is me, like clearly not understanding any of this. Like I understand what you just said, but the, so where do the banks get the money from the people who come and they deposit their money in the bank? Is that, or where are the, because now I'm like, okay, this is a fucking chain, which I had
It
never really
is.
thought of before, that it's really just one bank borrowing money at a certain rate and then relending it out at a higher rate. Is that what's happening?
That's what's always happening with these commercial banks.
See, we
Always.
needed this episode. We needed this.
Yeah.
I'm like, what the fuck?
Always. Yeah. So banks are in the business. We like to call it arbitrage, where basically I'm going to borrow money at whatever rate, let's just call it 4%, but I'm going to lend it at 8%. And so I'm only collecting that spread between my cost of funds and when I'm lending it out. That is the business of banks. So banks do it with our deposits. Go ahead, Allie.
And
Go ahead.
okay,
Yeah.
to add another layer to this, isn't it
Yeah.
also true that, say I put my money in a bank, that bank doesn't just lend my money out, they also lend my money out like to one person, they lend it out to multiple, right? So it's almost like
Right.
fake money, just like it's just fake. Everything is
What is
fake.
happening? What?
Like
Wait till I
how,
tell you. Yeah, go ahead, Allie. Go
okay,
ahead.
just how the hell does that not come crashing down?
Man, I'm so glad you asked that question. All right, so let's get nerdy about this. So this is what happened over time. Quick backstory: Great Depression happened around 1930s. Okay, so when the Great Depression happened, what happened was everything kind of fell apart. The economy was collapsing, and the Fed rate kept the interest rate high. All right, with the interest rate high, people couldn't borrow money, and so what happened? Massive unemployment. People were losing their homes, low wages, all of this stuff. So they realized, hey, if we want to impact the economy, we can either slow the economy down by jacking up the rates, or we can try to speed the economy up by decreasing the rates, i.e., 2008 and COVID. All right. So the question becomes, well, hey, how in the hell in 2008 did all of a sudden we were able to, or even in COVID, were we able to get these tax relief checks and all this other stuff? Well, this is what the Federal Reserve does. The Federal Reserve says, we need to do something called quantitative easing, which means I'm the Federal Reserve. I'm going to give the government $1 trillion because I'm going to buy bonds from the government. And then we're like, all right, cool. But dude, where are you getting the $1 trillion? The Federal Reserve says, I'm just going to make it up. I'm just going to put it on my balance sheet and then I'm going to give it to the government. That's literally what happens, which is scary as hell.
Wow, because we can just print our own money because we are the
We
world
can print our own
power or
money
whatever it's what is it called? I know for like the
for
next,
now.
by the time we release this episode, who knows?
Yeah. Yeah. So I mean, and it's really scary because we think about it. You can print your own money. Most people have heard this. Like we used to be on the gold standard, meaning that our dollar was actually backed by a physical asset. That went away in 1974 and 1975, which makes us a fiat currency, which means we're backed by nothing. We're backed by our word or our worth, which, just like you said, Ali, for now is pretty good, but we'll see.
And so, okay, to take it, not to go to Robert Kiyosaki, who's like doomsday every day,
Yep,
but
100%.
this has got to not last. Like, at what point is our fake money that we're just creating without ever paying off our fake debt going to come crashing down? Do you think I know that how long do you think the US dollar is even going to be important? Are we just going to switch to Bitcoin?
2
What
months. No, I'm playing. It's like we're screwed.
run?
No, but this is such a good question because here's my take on it. None of us know. Okay, this is a study of economy, right? Economics. And let's think about this. We all been to college here. For those who have seen it or don't know, economics is one of the hardest programs in the business and financial world. Like you got to be smart. And dudes go to Harvard, Oxford, all this shit with economics. And how many of them are 100% accurate about the predictions? Fucking zero. So it's like all of these warmongering and all the world is dying. It's like, cool, man. Like I hear you, but and you have the data to back up your proof. But think about it. This is a country that has so much influence in the world. It cannot die overnight. If the United States died overnight, the entire world would go upside down. So there's some sort of longevity here. I have no idea how long it's going to go, but there is some sort of longevity because we can't just disappear
Overnight.
overnight. Overnight.
Overnight. Yeah, no, I
I
love it.
forget what they say. Yeah, go ahead.
No. I just think it's funny that I did not know this is the direction we were going to go. But this, besides like the Robert Kiyosaki, apparently he's doomed. I didn't know that, but also like Ray Dalio. And I don't know if you guys have read like The Fourth Turning, like the whole United States. We're just, according to some really smart people, buckle up, people. The future's looking interesting.
Well, and it's all about perspective because I can't remember what the number is. Somebody probably out there knows. So if you guys know, definitely throw it in the comments or whatever. But the average lifespan of a empire, right, is only a couple hundred years, and I can't remember the exact number. But when you think about that, it's like, well, time's a ticking. We're getting close, right? We're getting close. So who knows what's going to happen at the end of the day? But that shouldn't prevent you from buying real estate today. Let's be clear. Okay. Soft plug. It should not prevent you from buying.
Dude, it's so funny. I was about to be like, yeah, okay, let's bring it back because
Right.
we went to the moon. So, okay, I think at this point, I personally have a much better understanding of the way that the behind the scenes work and that it is regulated by the Federal Reserve which actually, I don't even know if I want to go there, but basically there's a decision made as to what the baseline percent rate for lending is.
Right. And so that is the baseline rate that banks can lend amongst each other. Okay. Because that's how they borrow money. Now, to get to the real crux of what this episode is about is, well, all right, cool. The banks lend money at 4%. So what the hell does that mean for me and my interest rate? So when the banks, as we know, we arbitrage, right? So if we're borrowing at 4%, we have to make a spread. And typically when you guys go to a lender or to a bank, you'll hear this word often, prime rate. You'll hear prime rate a lot. What prime rate is, it's saying, all right, I'm going to take the Federal Reserve rate. I'm going to tack on average, about 3%. Now, prime rate is dictated by every bank, so there is no standard. But on average, I'm going to tack on 3%. And that combination is going to be my prime rate that I charge my best borrowers, the best, highest credit score, longest history, biggest deposits, the best. And typically when the average borrower, we're getting something like prime +1 or prime +2, right? So if we do our 4%, which was the Federal Reserve rate a couple weeks ago, plus our 3, so now our baseline is 7%. That's prime. Now a bank is going to charge, depending on your credit score and everything else, they're going to go up from there, from that 7%. And that's how it affects us as the borrower.
Okay, so understanding that, which that makes perfect sense, by the way, how can when people are always trying to predict whether the rates are going to go up or down, really what they're saying then is what is the Federal Reserve's going to dictate into the future, because what they're not actually saying is what banks are going to do, because the banks are just adjusting based on what the Federal Reserve rate is.
Exactly.
If you're looking to change brokerages this year so you can increase your business and you want to join us at eXp Realty and would like either myself, Ali Garced, or Shelby Johnson to personally sponsor you in, so that way you have access to 2 icon agents, text the word join to either my number, 914-318-4918,
or Shelby's number, 859-267-3849.
If I sponsor you and you have access to the both of us and everything that's 5 Pillars Nation, we have the checklist, the systems, the processes to help you scale your business. And don't take our word for it. We've had agents switch brokerages to join us that were stuck making $300,000 GCI, and they join us so they can scale. So text the word join to those numbers and we'll take the next steps.
That is 100% right.
Oh my God.
You're right on
Okay.
the money. And that's the part that kills me the most about the conversation, because yeah, you get all the gold stars. Hey, can we do like confetti on this? Can we edit that in?
Oh my God,
Like,
Rem,
let's-
please. Yes.
So you're 100% right. And as we just kind of discussed briefly, the Federal Reserve is concerned about the overall economy. So when people are sitting there saying, oh, well, after elections, the rates are going to drop. Pardon my French, but how the fuck do you know that? Like, be honest, right? You know what I mean? Like, how do you know that? Because it has more to do with consumption patterns. It has to do with unemployment rates. It has to do with our exchange rate with other countries and their currency. Yeah, all these things influence the economic monetary policy what the Federal Reserve actually dictates. So when people are like, oh, rates are going to drop, what is the event? What is the global event that's causing the rates to drop? If we don't see it, then buckle up. It's not going to drop for a while. Get used to it. You shouldn't wait to buy, for that reason. Go ahead, Alan.
You should buy and wait.
Exactly. Yeah.
So
Laugh,
I'm
live,
on
love.
except for real estate. I'm on this like drip that I do not know how to stop. I get this lender's stuff, like the phone call, the text message that I can't unsubscribe from, which is 100% illegal. But anyway, I want your thoughts on this. Trump is going, according to him, a lot of economists are saying that Trump is going to do things that are good for the economy, which will mean there's less of a need to cut interest rate, which is not so good for all of us. What are your thoughts on that?
This might kickstart it. The question might come back to you. So in that instance, if we're just staying very subjective here, the idea is if the economy is doing well, there's no reason to reduce the rates, period. If the economy is doing well, we're either going to maintain. If the economy needs to slow down, it's doing too well, then the rates will rise. But if we need to kind of kick in and speed it up, the rates will drop. So if the economy is doing well, we can expect the same interest rates moving forward.
Yeah, all of that makes sense. Okay, and so before I move into a couple like client specific questions that, are maybe common that agents might hear all the time, the first thing I want to ask is if people are listening to this and they're like, I want to nerd out, or if I have a high C on the disc profile client who like really wants to know the details, where could I direct them? So what is like the source knowledge for keeping on like tabs with this stuff?
I got a couple resources for you guys. So the first one is just go straight to the source, the federalreserve.gov. That's it, right? You get to see all the policies that are coming out, all the announcements, all of that good stuff. You'll be right there. For those who like more visual or easily digestible content, there's a website called the Federal Economic Reserve Data, FRED. Federal Reserve Economic Data. There you go, FRED, F-R-E-D. And for anybody who's ever seen a presentation from like a lender or somebody in finance and it shows like interest rates and it shows a history of something, typically in the bottom corner, you'll see F-R-E-D. That's what that is. It's very easily digestible material there. So those are the two like absolute go-to. You'll see the stuff. Now, if you want a little bit of help interpreting the data and getting some points of view, highly recommend the Wall Street Journal. I believe the specific publication that they have is called The Journal, I believe. And so that's where they only talk about the Fed activities and financial activities. So that one's really good. You can go to NPR. Planet Money is a great podcast that talks about that stuff very specifically too. And then there's a ton of different books. The one I got to throw out there, if you really want to nerd out, would be The Creature from Jekyll Island, which Robert Kiyosaki praises. But the reason that book is so good is because what they're trying to do is debunk the Federal Reserve. So they're showing all of the reasons why the Federal Reserve is flawed. And the reason I recommend reading that book is because now, remember, economy has to do with psychology. It has to use with human characteristics and habits. The more you realize how many variables there are, the less you will rely on somebody from CNN telling you what the hell the interest rates are going to do. It'll help you get out of that mindset. And for all of the agents, it'll help you articulate your responses much better to your clients. So I do highly recommend that book too.
Interesting. I never heard of that book. For Fred, the website would be fred.stlouisfed.org. Do
That's it.
you I haven't been on this website in so long. I actually had started my master's in something related to real estate. Don't even remember. I stopped it because I was like, why the fuck do I need this? I don't. Do you know why it's based off St. Louis? Not that
That's a great question. I don't know, but it had something to do with the Federal Reserve Bank of St. Louis. Now, I don't know if the Federal Reserve Bank is located in St. Louis. Maybe that's it. I really don't know, but it had something to do with that. I can definitely look that up. I guess I should know that, but that's just the website for it. I think it's the location, honestly.
when you're going on these websites, it's pretty intense. So I think out of all the resources that you mentioned, I think Planet Money may be the most elementary. Or are there any other elementary level one for Ali to look at?
Yeah, I'll tell you another one. So I think Planet Money is great because it's a podcast platform. So you're going to hear people explain it. You're going to hear stories. NPR is really big on stories. So you'll get to make the correlation, But another one is Investopedia. Straight up. It's like Wikipedia, but it's all about investments and finances. So it's very good at breaking down information. It comes with different images and formulas and infographics. So I use Investopedia a lot for baseline studying just to understand the concepts. Then I dive into the other ones to start to try to, tie everything together.
Cool. Okay, awesome. So what would you say if someone said they're going to wait until the interest rates drop?
I would say buy now and wait. No, what I would say is, I would say after the conversation here, we can't control the interest rate, right? So let's talk practical, how I would say that to a client. A client comes up to me and like, yeah, I really want to buy, but I'm going to wait for the interest rates to drop. One thing that my communication coach, he says is never ask the question, why? Why would you want to wait? And when you ask the whys, the way that he explains it is because people will start to really cement their belief in whatever the hell they're saying. You're giving them the ability to defend themselves. Well, I don't believe that because this and had to happen. Trump got elected, blah, 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 whatever the case is. So instead, this could be an opportunity to say, yeah, I can understand that. I don't necessarily agree with that because then you can say interest rate, I'm going to tell you, this is Mike Glaspie saying it from a nerd level, right? So you guys can take this for what it is. I would say something to the effect, I can understand that, but honestly, knowing that interest rates are really affected by the global economy and there's nothing coming up that seems like we would need to change the interest rates, I don't see it dropping. So if you really want to buy, now's the time to buy. We always can refinance later, but if you wait on and on, we have no idea what's going to happen. We can't predict it. Something to that effect is what I would say.
Okay, love it. So kind of similar, but how would you handle someone asking, what do you think the rates are going to do in the future? How would you answer something like that?
I would crack open The Creature of Jekyll Island. I would turn the page, chapter, and I would be like, read. No, no. So the question is, what do I think the rates are going to do? All right. So honestly, I feel like the rates are going to stay stable. I think it's going to be here for a while. And I would say that. I see no indication that there's going to be a big economic change one way or another. So I don't see the rates changing. I think we need to buckle up for the long haul that we're going to be somewhere in these ranges. Go ahead.
What would you say would be an example of a big economic change? Of course, '08 is an example. COVID is an example. Do you have any other, just so I can have an idea as a client of what to be looking out for that might trigger me to think, oh, this might impact rates?
Yeah. That's a really great question, because the four big ones would be, the four big ones that are relative to this conversation with interest rates would be the 1930 Great Depression, you got your 1970 oil bust or whatever that was, you have your 2008 crisis, and then COVID, right? And so these are unprecedented, you know the word I'm trying to say. These things don't happen. They pop up
Black
out of nowhere.
swan.
Black
It's the black
swan.
swan.
Exactly right. Most of the time, you'll see that there's long periods where interest rates are fairly stable within a certain range, period. And only these black swans that come in really affect the reason for us to change it. So there's no reason to think that now that we've stabilized, we've only been out of the COVID pandemic now for whatever, let's say 2 years. I don't even know. And I don't know when this is going to air per se, but we've only been at this higher interest rate for maybe like 2 years. Buckle up. We might fluctuate by 50 basis points, half a point, whatever. We might fluctuate in there, but we're not going back to 4 for any time soon. Like, there's no reason that the economy would need to go to 4. So if this is what the clients are banking on, I feel like the clients need to be educated a little bit more, because they're hearing that person on TikTok, that person on wherever saying interest rates are going to drop, don't buy, or you buy now because interest rates are going to increase. It's like, these motherfuckers don't know. They don't really know. Nobody does.
Or it could be the case where like if Trump betters the economy, then the interest rates are going to stay the same. Or if he increases or whatever betters the economy so much so that the demand gets so high that interest rates will rise. Would you say this? I really don't follow the news, but this has been popping up on some of my stuff. Would you say a black swan event would be what Russia is doing now with this like new ballistic missile and like testing fucking missiles and shit?
I'm not really an expert on Black Swan, right? As far as what it is, but when we're talking about these world changing things, I would say a Black Swan event would be if Russia fired a nuke on a country. That would be a Black Swan event. You know what I mean? Like, just testing and doing all the ballistic things, I don't think that's too much of a global impact. And understand, yes, it's affecting the global economy, but I don't think that's enough to shift the power of the currency, alignment of nations who back certain countries and things of that, just because they're testing. But if they were to strike it, I would believe that that would be a big enough event to say something's about to change drastically.
Do you have a follow-on question, Ali? No.
No, I just like it like that stuff is just stuff that I never think about. Like like big ass picture, like Russia drops a bomb on somebody else. Like say just I don't know, another country. What happens with our dollar? Like we're going in because we're America. So then like military increases, all of that, like is that does that worsen our economy? Like, how does that affect a home buyer? Which it does, like there's so many fucking events that just like, I hate the word trickle down, but like affect second and third order effects
Yep.
for the home buyer. So it's
Good
like,
military
I don't know, it's
terms.
kind of crazy how, yeah, I mean, fucking, it's better than whatever.
Yeah.
Yeah. It's just this shit that like, we don't think about, or I mean, I don't think about.
Right.
Me neither.
So,
At all.
And most realtors aren't. Why would they think about the economy? But in our realm, it's so important because interest rate is what buyers and sellers die on. They hang their breath on these interest rates, and they have to understand we don't affect it. Hell, the president barely even affects it. It's the global economy, period.
Okay. I have two questions. When hypothetically, like when there is a change in the Fed's, and first, so I get the fucking terms right, in the Federal Reserve rate, is that what I'm calling it? Like it's the rate. Okay. The Federal Reserve's rate. Okay. What is the delay for the impact that our clients would see in their local lending sources when there is a change at the Fed level?
Great question. It's almost immediately. All right. And the correlation is almost direct. It differs by bank, obviously, because each bank determines their rate. But essentially, if we're at 4% reserve rate, we throw in our prime rate now. So we're at 7% borrowing cost or cost to us. If it dropped by 50 points and the Fed rate went to, let's call it 3.5, typically we'll see that the interest rates would drop to about 6.5. The correlation is pretty close. So it's always not always, again, it's roughly about 3 points over whatever the Fed rate reserve is. And that changes for a bank. And it also changes on the borrower. If you got bad credit, it's going up. It's going higher and
Totally. Because
higher.
it's
But
prime
it's almost
plus one or two. Dude, I've been taking
exactly,
notes. I'm the best student ever.
exactly.
Okay.
Yeah.
My second question, because now you've said it a couple times, and I just want to make sure that I understand. You've said basis points. You've said 50 basis points. Like I understood, when you're like, hey, it might change a half a point. That makes sense to me. What are basis points?
If you're looking to change brokerages this year so you can increase your business and you want to join us at eXp Realty and would like either myself, Ali Garced, or Shelby Johnson to personally sponsor you in, so that way you have access to 2 icon agents, text the word join to either my number, 914-318-4918,
Or Shelby's number, 859-267-3849.
If I sponsor you and you have access to the both of us and everything that's Five Pillars Nation, we have the checklist, the systems, the processes to help you scale your business. And don't take our word for it. We've had agents switch brokerages to join us that were stuck making $300,000 GCI, and they join us so they can scale. So text the word join to those numbers and we'll take the next steps.
Great question. So basis points is just a financial term where we're talking about the individual percentages. So 1 point, let's say from 6 to 7 would be 100 basis points. So when I say 50 basis points, it's basically what we would say half a point. And something about the financial world, this is why, Ali, you mentioned Investopedia. I highly recommend it to a lot of listeners because for whatever reason, when the financial industry was created, they decided to use big ass words that all mean the same thing that we know. They just chose those words. So you got to hire us and pay us more money to figure out your problems. But that's what basis points are. So in our realm, like for the real estate investors and everything like that, we can just call it like half a point on interest rate and things like that to make it more relevant for us.
Okay. I think that is like basically all of my like questions that I wanted to dig into, but I do know that there are a couple more things that, client agents might be asked that might be helpful to hear your take on it. So, and by the way, these were provided by ChatGPT before this. I was like, what are common questions? But similarly, like, okay, so outside of the prediction of what rates are going to do, a lot of clients, struggle to understand kind of the impact on their buying power. Because a lot of times they're like, oh no, rates are going up. That's, bad or good or whatever, but they don't really understand like what it actually means. So can you kind of explain, the difference, the impact of interest rates on buying power?
Absolutely, absolutely. So we'll keep this one fairly surface level because I don't have any of the math in front of me. But essentially, what we're saying is in order to borrow money, we now have to pay a higher interest rate. Okay. Now, the lenders, when we go out to get these loans, one of the biggest things that they're looking at is our debt to income, our ability for our income sources to cover our debt. So if it's a higher interest rate, that means the payments that we have are going to increase. And so this we've seen drastically when COVID hit. So in 2019, 2018, 2017, everything was flying off the shelf. When COVID hit, people paused out of fear, and then interest rates dropped because it paused. They were like, we need to kick this economy up. So it dropped. People were able to buy houses like crazy for a couple of years. And then all of a sudden, when it switched again in 2023 and the interest rates spiked up again, all of a sudden people were saying, I used to be able to buy and afford a $300,000 home. Now, even with good credit, I can only afford 225, right? That's because the interest rate went up. So the interest rates affects our buying power. But as a little caveat, guys, as you're working with real estate agents, we know that what we're trying to do is fulfill more than just the buying power of the client. Clients want to feel safe. Clients want to be able to afford where they're living. They want a nice house. So all of that buying power should be irrelevant in the conversation as long as we can find them the right product. But that is how it's going to affect our clients.
Okay, I think this is my last question. So, okay, hypothetically, there are programs out there to lower the interest rate, right? There's like buy downs, there's like grants and shit like that. So, actually, do you know? And I actually don't, I've been out of selling real estate, especially to buyers for so long. Do you either of you really know what options are out there? And I know neither, well, actually, Mike is a fucking lender, kind of like the commercial, but uh, what are, ideas out there if there is a client who has a shitty rate, whatever, and they really just want to get into a certain price point, increase their buying power. What are maybe some programs and what should they be thinking of in regard to how to decrease the interest rate? Does that make sense?
It does. So
Also,
I
if
don't
this
know
is
about
not your area,
programs.
you can
So
be like Shelby.
well, no, yeah, no, I don't know programs. So I'll leave that to Ali. But what I will say is, yes, you can buy down the interest rate in some cases. Most of the time, that makes absolutely no sense to do. You don't get your money back from that. It's not a smart investment, but you can. But ultimately, one of the biggest levers that we have to look at, there's really two things. Either we put more money down to we can decrease our loan amount, right? Decreasing our loan amount is one, and then decreasing the interest rate is the other. Those are really the only two levers in order to be able to purchase something higher. So you can put more money down, you can potentially sell off assets to put money down, all that good stuff, or you can buy down the rate. That's really the two objectives. Now, when you do the math, get with a qualified realtor. And so I know they're all the realtors listening here. If this is my opinion, and I stand on this hill, you should be able to walk a client through elementary conversations about what an extra deposit would do and an interest payment pay down would do. Now, you're not the lender, go to the expert, but you should at least speak with the lender, get a good understanding of that knowledge so you can help problem solve in the right direction with the client and with the lender. All right. But those are the two major levers there. Some of them do not make absolutely any sense. And if you leave it up to the lender's going to say buy down the points. Why? Because that increases the lender's return, but it may not be a good decision for your buyer or for your borrower, right? So that's why I suggest you really understand a baseline elementary for that. But Ali, do you know of any programs out there right now?
So, yes and no, but I'm glad that you answered why it's not always smart to buy down the rate. That's interesting. Would you say mainly that's because a lot of times people don't hold on to the loan long enough? Or okay.
100%. And it basically it boils down to this. If we're going to nerd out over numbers, look, I have a cost associated with borrowing this money. Period. I do. The lender has a return associated with the lending. Anytime I pay extra points, it increases the lender's return, which effectively increases my cost, right? And so, average lifetime of holding a property is 5 to 7 years. When we start looking at all the money that we put into it, our costs are a lot higher than what our interest rate that we thought was when we start paying all these points. And it oftentimes does not pan out in our favor.
Got it. Okay, cool. Thank you for elaborating on that. The as far as the like down payment assistance programs and XYZ, I don't even know what the other names are. I have never had a client I've never dealt with that. What I have heard and from other agents and other clients that turn into, from home buyer to home seller, it fucks them at the end because there were strings attached that they didn't know. And of course, that like it was in the fine print. So a down payment assist now I may be using the wrong term. It may not be called down payment assistance. I'm not sure if down payment assistance has any strings attached. I really don't know. But there are programs similar to that where it may sound great up front, but then when you go to sell later on, you have to pay that entirety back with interest. Or sometimes there was one time where I have a listing agent that I knew in Tucson was trying to sell a house, but the sellers had to stay in that property. They couldn't even sell. So like, who cares if you're getting divorced? Your ass is staying in the fucking house and paying the loan, like it's crazy. So please, like, even though there may be some programs out there that sound good, if it sounds too good to be true, a lot of times it is, just ask what are all the fine print. And if you have any questions about like reading it, it may be worth throwing it into Chat GPT and having it tell you what are all the gotchas. Or of course, you could just hire an attorney. But I am like, and because of that, I just am so not into any sort of program to help me or to help my clients just because I do not want to have them stuck in a loan that they are forced to pay or be in for several years before they can sell. So shit happens in life. So yeah, that's my opinion on assistance.
Okay, I have no more questions. Ali, do you have any more questions for Mike?
No, Mike, you've done a wonderful job so far.
Fucking
Thank
crush.
you, because we would not have been
Thanks.
able to do this.
Literally not at all.
Which
I learned
is
so
just great.
much. I
Google it.
learned so.
That's what we go for. That's what we go
It-
for.
And listeners, in case you did not know, Mike and his wife Yesenia own a bookkeeping and CFO business. And so if your books are screwed, let's be, you don't even have books, most of you. If your books are a hot mess or non-existent, if you have no clarity in your financials or you have no clue what the current financial situation or the future holds, like you fucking need Mike. You really need him. So he has taken over my personal bookkeeping and all of our financial analysis. And it has been such a game changer. For the first time in my years of doing real estate, I have reports every month. There's a Zoom that they go through. Hey, this is where you're at. This is what everything looks like. I've never had so much clarity and it's fucking game changing. So with that, Mike, what did I not cover that you guys, tell us a little bit more about your services and where people can find you?
Yeah, absolutely. So anything in the financial realm, come let us know, right? We got a tax department now, so we can help file, prep, and do tax strategy. We do payroll. We do the whole gambit, right? We have a significant team on board that can knock it all out at a high degree. So where do you find us? You can actually go to the publication notes on the creature of Jekyll Island. And no, I'm playing, guys. I just want to throw that out one more time. But you guys can find us at g2businesssolutions.com. You can go to our Facebook page, G2 Business Solutions, all that good stuff. Or you guys can just come find me on Instagram or YouTube. But under my name, Michael Glaspie, the fractional CFO. Just reach out. We're here for you.
To add on that, who should be reaching out? Like who do you work with and who do you not work with? Just so people know, like this is the person for me.
That's a great question. So we like to stick as close as we can to the real estate industry. We do have a couple of clients that have kind of went out of that scope, but we're real estate through and through. Our team has over 4 decades of real estate experience, whether it's in the financial side, accounting side, investment side. So this is the area that we know. If you're a new agent who just is lost in the sauce and like, look, I just need clean books, we can do bookkeeping. Okay. Every single one of our tiers is customized to the client load. So now let's say you're an agent that's been here for a while and you're crushing. You got sales, but you're looking and you're saying, hey, man, I've done all these sales, but I don't have any money in the bank. Okay, now we may need to talk about CFO services where we're going over your money management strategy. So no matter where you are, if you're in the real estate space and you have questions around finance, you don't feel comfortable around finance, you can reach out to us and we'll have a talk.
I love that because your free stuff is so good. Like, oh, sorry, Shelby. I use your KPI tracker every other day. So it's like, I don't know. I love it. I love it. So thank you.
Thank you.
Yeah.
I'm glad you use it. Makes me feel better.
Freaking spreadsheets. There, you're talking to the right people.
You're a freak.
Yeah, I was like, that's what I was like. Damn. I was like, oh, that was so good. If you're a freak, then yeah, call Mike. Okay. Oh man.
Yeah, but real talk, Mike is literally one of my best friends and definitely talk to him. But otherwise, that is all we have today. So you know what? Oh, if you want free tools, go to theagentgoldmine.com and otherwise be a bro and share this show. Bye.